But one thing you notice with banks is that the banks write the contracts. The bank will always write the loan agreement and give it to you. Why? You remember what I said? The person who writes the contract is the person who gets to dictate the power dynamics, the risk dynamics, and the money dynamics, right? So the bank gives you the loan contract. And the problem with the bank, with the loan agreement from the banks is that it is inflexible. So one example, the bank wants you to start paying back the repayments starting from next month. And then you'll be paying every other month. For some kinds of businesses, that repayment schedule doesn't work well for you, depending on the cash flows of your business, right? So that's why I encourage people, and I've seen a lot of people where this thing has worked. Instead of taking a loan from the bank, take a loan from a non-bank entity, which could be an individual, a group of individuals, a cooperative, or something else. Why? Banks are very rigid because of their policies come from headquarters. So you really cannot negotiate with your loan officer. That loan agreement you are seeing is from a template, and that template came from headquarters. So you really cannot change a lot of things in that situation. But if you are dealing with somebody who is not a bank, maybe like a potential investor, and you don't want to share control, you want them to give you a loan, I want to share two options with you. Right now, banks are giving out loans at interest rates between 30 to 35%. For some kinds of businesses, particularly if the velocity of transactions in your business is high, that may not be a problem. The interest rate is not the problem. The problem usually with bank loans is the timing. It's either the timing is too short or the repayments are too aggressive. If you don't want to be paying back every month, here there are a couple of examples that I've seen. You can take the same loan at 30%, but you can agree that I'm not going to be paying a fixed amount every month. Instead, I'll be paying you the interest portion twice a year or 4 times a year. You get what I'm talking about? So if you're taking a loan of $100,000 or 100 million naira, 30% interest comes to 30 million naira per year. But what you're telling this person now is that instead of breaking down the entire loan the way a bank would do it, I will pay you the interest portion, the 30 million. I will pay it in 2 installments or 4 installments, quarterly or half yearly. Then at the end of the year, I will pay you the 100 million. So all you have just done is that you are paying the same loan, but you have staggered the repayments. You've restructured the repayments in a way that favors your business. Because your business may not be able to pay a fixed amount, maybe 50 million naira every month, you're paying 15. You may not be able to do that. But if you stagger it such that you move the principal to the end of the period and you pay only interest, or you can tell the person, you give me this loan for the whole year, I won't pay you anything, but I'll pay you everything at the end. The benefit is that when you are dealing with a non-bank, you are able to negotiate the factors, the parameters of the loan. You can negotiate the timing of the loan, you can negotiate the interest rate, and you can negotiate the schedule of the repayments. Yeah. So that's it for investment.